So welcome. So I welcome you all to this psychology class of 2025 on April. So first, guys, in the morning, like in the evening, we usually first start with reviewing how the market has been today. Did we get entries or we didn't get entries in the market? You see, so we're going to start with. So we're going to start with yeah, yeah, So we're going to start with how today's market has been and did they get opportunities on our on our trades, or something of that sort. So we can start. So we can start instantly. So we can start. Okay, now we can start, guys. So this one is so you can see right now here we have GPPUSDs. So this one is a 5 minutes time frame. Then it's a 5 minutes time frame. So in this 5 minutes time frame, we got today. Look on only one entry, but ilikuwa for the high and low for the high of Asia. Only like the other system guys naambianga like nimekuwa nikirepeat like every day, nimekuwa nikirepeat like every day nimekuwa nikirepeat like every day kuonyesha like yeah, I don't know if somebody took advantage leo of London Open. Let me just show you something. Yeah. So guys, yesterday I told you guys about the Asian market. Yeah, I told you about the Asian market like this. I told you guys about the Asian market and or London, something of that sort. Told you you can use a let's say you want to trade the London market, and also for example we have here the London market. So we have here the London market. So we said, guys, like every session has got the high and the low. I'm gonna be repeating this because this thing is very important, Sana. It's very important a lot. So here we normally have so this one is the Asia high, this one is the Asia low, guys. So on this Asia high here, we usually have stop losses of people when you set up a stop losses. So we have here stop losses of people. Yeah, most of the stop losses of people in your sell. Then here we have stop loss of people on your sell, on your buy. So here do we normally have the stop loss of people, the ones they have set maybe a buy market, they should set their stop loss around here on the low of Asia. Same thing applies to London, guys. Stop loss is here, 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 here. So here. So what we're going to do, guys, is we're going to check on the London market today and the New York market. So, like today on the London market, you can see today on the London market, on the New York market, we had the low of London. So here is the London market. So this one is today's market. This is today's market. So we have the high of London and the low of London. So here we had stop losses of people. Hapa kuna watu walikuwa wamekama stop losses of people here. Also here we had stop losses of people here. So this one is London. So today, when the New York market was opening, let's say this one was London high like this. So today, when the New York market was opening, when the New York market was opening today, we had like market going up. Yeah, yeah. Remember the market went up, went up, went up to the low, to the high of London. Then it had like trying to it was trying to break the high of Asia like this. but it closed with a body, with a wick inside. So this means what? So guys, so this what is the what is the meaning of this interpretation? The meaning of that interpretation of closing with a wick on a downside, it was trying to take liquidity for stop losses of people of London. Here, can you see? Yeah, and I told you guys, this one also is a strategy which you can decide to trade on it, or you can decide maybe to incorporate on your trading system, on your trading plan or strategy. So the market came and took the high of age of London with a long week, then it went down. So this one was the best area to trade on the New York market, in the New York market to sell here. Yeah, on London today it failed. On London it failed, but on New York it happened very well. So let's go dive into the chart. Let's go dive into the chart so that we can see together, guys. We can check together. Let's dive into the chart so that we can check together. Okay. Okay, let me stop share this. Then I share London. Let me share London market. London market. Yeah. Also today we had a trade on each on the which system is this? It's called Bollinger Band. Yeah. So, but first let's start with the high and low of London. So so let's start with the London, then we go to New York. Slowly by slowly, no hurry, guys. Just so that we can get to understand what's going on in the market. So today we had the high of London. You can see, guys. Now you can see the high of London here and the low of London. You can see. And guys, yesterday I insisted that you make sure you draw on the bodies. Don't draw on the wicks. So don't draw on the wicks. Draw at least on the bodies. But if the market comes to the wicks, also you can take that trade. But on the bodies, that's where the money is. So now, guys, so what I'm trying to say is, for example, you can see here. So I cannot set my horizontal line here on the wick. See here. I want to set on the bodies here. You can see where the bodies is here. See here? Because that's where the volume is, the money. We normally say the money or the flow of capital is on the bodies. Yeah. So whether you're trading ICT, either you're trading any currency that you know, guys, any currency that you know, always sit on the bodies. Yeah, it's very important. Yeah, it's very important. I didn't know about it like long time ago that bodies represent the actual price of the market. Yeah. For me, most of the time I could draw on our bodies on the wicks. But this does this one doesn't apply on a trend line. So on trend line, ndio unatumia wicks only. So on trend line only, that's when you're going to use on the wicks. But on other strategies like liquidity trap, the high of London, the high of Asia, the high and low of yesterday, all of it, you're going to draw on the bodies. Okay, let's dive in, guys. Okay, let's dive in. So you can see today we had the low of London. Yeah, we had the low of London. We had the low of Asia and the high of Asia. You can see, guys. So today the market came on the London Open. See how it got trapped. Yeah. So this one was a very good trade. So come on, get this trade. It was a very good trade. Yeah. Someone is saying I can't see your screen. Uh, yeah, Rosa anasema I can't see your screen. How many are able to see my screen, guys? How many are able to see my screen? Maybe thumbs up if you're able to see my screen. Okay, okay. Yeah, I think she has exited. Okay, okay. Okay, let's continue, guys. Let's continue. Yeah. So I was saying, guys, like today you can see here, today here we got a nice trade. It was a really nice trade. Even me, I entered that trade and it failed. Yeah, because I followed the rules. You see, I was trying to capture the liquidity in the market, on the London market. You can see here. So the market came here and it gave us this candle. Then some of us we entered this trade, but it failed. You can see the market failed to go down because you can see here the liquidity, it has taken liquidity. Liquidity has been taken here. You can see? Yeah. So this is what I'm telling you guys. It's called liquidity trap in the forex market. See, it's called what? It's called liquidity trap in the forex market. It's very important to understand it. Also you can trade it as a strategy. Yeah. I have um I remember it was on February. It was on February. I gave someone this strategy. Yeah. And the strategy it has been performing well. And last month it has given him like it was around 15%. It was around 15%. Yeah. Last month imekuwa poa sana, imeperform poa sana. Yeah, but we don't know this month how it went. Yeah. So the goal you as a trader is to focus on trading the strategy, not not trying to make money. Yeah, I think that is the idea that I got somewhere, and it really helped me. Yeah, don't trade because of money. Then trade because you're trying to follow a system, you're trying to follow a plan. Yeah. But if you trade because of money, when you trade because of you want to make money, then you get like five losing trade in a row or four losing trade in a row, you're going to stop trading that system. Yeah. Now guys, let me tell you, like in Forex, the strategy which I've told you guys, all of them it works, guys. All of them it works. The ones I told you about the first candle of London Open, it works, but it doesn't work all the time. You see, it doesn't work all the time. So what is your goal? Your goal is just to focus on one currency, trading it consistently, taking losing trades, winning trades, losing trades for a month. Then you can call yourself a trader. That's true, guys. If you want to do a challenge, if you really want to do a challenge, just take one strategy. Actually, the month is early right now. The month is new right now. Take one strategy. Then this strategy, maybe give yourself a role that in this strategy, I'm going to be trading this system for 30 days. For 30 days. Without changing, without looking for another system, just one system. Like for example, this one. Actually, you'll prove me you're going to be a profitable trader. Yeah. So it's not about like trying to trade every system. You see, guys. Yeah. The system which I actually told you guys, like you can be a profitable using that one system, and a very easy system, yeah, to execute. And also this one is very good for people who have 9 to 5 job. Now, for example, like sometimes I usually get maybe calls from people telling me, "Oh, Nito, I cannot trade. I don't have time to trade because my job is so busy." Then I usually tell them that you can schedule a time to trade, because for us, for this system, you can schedule maybe 30 minutes a day to trade. Only 30 minutes a day. From 10 to 10:30, you're out. You can do other business, you can do other things. Because for you, maybe you want to target only liquidity trap. So it's not about like other system, because you have got other system like moving average. So you get most of the time like sometimes for moving average you can wait for 3 hours, 4 hours for the market to bounce the moving average, and you cannot just remain on your screen like you're just here watching the market for 3 hours waiting for the bounce. For me, that can't. For me, that one it can't work for me. Yeah. For me, I like being in the market. I like trading the first 30 minutes to 1 hour. I'm out. Yeah. Yeah. First 30 minutes, 1 30 by first 30 minutes I'm in. Yeah. Okay. Let's continue, guys. So you can see here. So this one is what I was telling you is called a liquidity trap. Here they've trapped stop losses. Unaona hapa wamekuja wametrap stop loss za watu, ya sellers, ya buyers. Na wakaenda, unaona? And they went, guys, you can see. Boom, and they went. So let's go to New York. Let's go to New York market. So in the New York market, we said, guys, we are going to mark the high and the low of London. That is the fact. We're going to mark the high and the low of London. So let's mark, guys. Let's mark. And we said we're going to mark on the bodies. See what happened. See what happened today. I was telling you guys, like, you can schedule to trade any system that I usually tell you is a system that I have tested it and it really works. But it doesn't work every time. That's the fact. It doesn't work every time. Um it works sometimes, but it doesn't work more times. Yeah. I mean that this system it will not give you profitable every day. Like you're not going to make profit every day, but over time you're going to be a profitable trader if you follow only that system for maybe 1 month, 2 months trading it. So you can see today here we had a trap here. So you can see, guys, on the trap liquidity was taken here. So this one is kind of like an order blocks, kind of like an order blocks. Mm, kind of like an order blocks. Yeah. How many of you here maybe they have ever traded order blocks? Maybe someone can yeah. How many of you maybe they have ever traded order blocks? Yeah, order blocks. Yeah, same thing. Kuna Luma, Misani. Okay, okay, okay. Yeah. So same thing now funzo sahi ni kama order blocks. It's kind of like an order blocks. Yeah, it's kind of like an order blocks because order blocks inachukua liquidity on the high of Asia and then the market goes down or the high of London. Yeah. So to mean, guys, like the most important thing you must understand about Forex is that to know where the liquidity is. You see, guys, to know where the liquidity is. The liquidity is. So where do you get liquidity? You get liquidity at the high of Asia, at the low of Asia, at the high of London, at the low of London, at the high of yesterday, and the low of yesterday. That is the main areas which unaweza kuwa interested every day. No. Unaweza kuwa interested every day. Yeah. And for this one it's good to trade na trading view. Trading view is good sana because for me I love trading view. Yeah, sometimes I use MT4. Sometimes I use the MT4 for yeah for MT4. Yeah. Yeah. For MT4, yes. Okay. So today here tulikuwa na trade. We had a trade here today. You can see liquidity trap. So this one could your entry, guys. See this one, this candle. Yeah. Which candle is that? Maybe if someone is maybe by on chat box. Which candle is that, guys? Which candle is that? I want to see if you're very keen to understand these candlesticks. Maybe you can type on the chat box. Which candle is that? Let me see. Let me see the first three people. The first three people. If you're getting. Okay, okay. Let me check. Let me see, guys. Guys, you can type something. Yeah, inverted hammer, correct? Uh-huh. You can call it inverted hammer, you can call it shooting star. Yeah, something of that. So you can call shooting star. So that candle usually means that whenever you see that's okay, okay. Rosa. I think Rosa, you have a problem with the internet. Nasema sioni screen. Yes, yes, yes. So I think Rosa, what you can do, you can exit and then you come back. Can exit and then you come back. Yeah, so we have Fib anasema shooting star. Robin anasema shooting star. Yes, it's a shooting star, or you can call it inverted. Yeah, yeah, it's correct actually. It's correct. Yeah, shooting star. It's called a shooting star. So what does that candle means? So that candle means that it means that the sellers, they have taken over the market they have taken over the market. Yeah, let me just say sellers have taken over the market. Now they're going to downtrend. So it's a good trade. And so maybe hapa ungeka stop loss. Ungeka maybe your stop loss around here. Maybe your stop loss around here at the high of that candle. You can see the high of that candle. You can set your stop loss there. Then your entry is here. Then you ride the trend. Till now the market is on a downtrend. See, guys? Yes, yes. So let's check maybe if we had another currency on Euro USD. Let's check maybe Euro USD. Same thing, guys. Yeah. Hope guys you're seeing this. Same. Also here we can see the high of Asia. The market was trying to go down, but kumbe ilikuwa ni it was kind of like a reversal. You can see here on the high of that candle. Exactly. Ilikuwa ichukua liquidity, then ka pretend that it's going down. Maybe someone was on sale here. The market went around 30 pips, then it reversed. Yeah. But on New York, it went well. On New York, it went well. You can see. So, for example, here, you can see, took liquidity here. Boom, a shooting star. So, this one again was your entry candle. So, you could have just entered it maybe on that, on this, it's called what? It's called a shooting star. Could have entered on that shooting star, guys. Okay, maybe check another currency. So same thing, unaona guys. Just angalia jana see yesterday we had a trade on gold. No, see yesterday we had a trade on not gold, USD. But today it failed. You see, yesterday we made maybe +3. And yesterday, New York, we didn't have a trade. New York, it failed. You see? So to me, if yesterday maybe you got a winning trade on a London market, to mean the next day you might have a losing trade. That's why it's very important. That's why it's very important to take every trade the market gives you. If you miss one trade, it will really affect your account. It will really affect your account. Like for me, I, for me, I usually trade the New York market. I usually trade the New York market using Bollinger Band. So last week, so like the whole of this week, guys, I've been having losing. From Monday, from Monday, I got a losing trade. On Tuesday, I got a losing trade. On Wednesday, I got a losing trade. Today, I got a winning trade, and I got a winning trade of 5%. Can see. So for me, I was just trading. Yeah, having hope that tomorrow maybe the market might get me a winning trade. Yeah. So it's good. It's good not to. It's good to trade every setup the market gives you. So when you check, for example, like check for example gold, XAUSD. Let's check gold today. Yeah, gold today kuosha vizuri. Yes. This is the one nakwambia, like every day is not a Christmas. Not every day is a Christmas. See, yeah, it pretend the market is going down. Wanna see the market will pretend the market down going down, then it failed. But today here, today on the high of London, can see the high of London here. The market came up, took liquidity at the high of London, then boom, the market goes down again. You see? Then boom, the market goes down. Yeah. So this one I'm expecting this market to go a little bit down. A little bit down. Yeah, a little bit down. Yes. Can see. Yeah. So also here we have a W pattern. So here we had a W pattern. This one too ningechukua. If I could get this entry, it was a very nice entry. See this one? So this one is the low of London. Like guys, I think in this class I'll be focusing only on the London market, New York Open, and London Open. I think that is what we're going to learn. We're going to understand. And by watching these videos, guys, when you watch these videos of mine of trying to show you like where this level, when you watch it maybe like more times, you're going to get an idea of what I mean on London high, London low, what I want to look for the market. So you're going to sink in with the market. You're going to sink in the market. So that's what we're going to focus on. the W patterns, the M patterns, the high of London, the high of Asia. So we want to understand the structure that usually happens on the London market. You see? Yeah, yeah. Yeah. So you can check on London, New York. Yeah. So we are not focusing on currency, but you can check on other currency too. The market can give you entries also. So you can see this one is the today's market, the gold. The market came down on the low of London. It gave us the first leg here. You can see the first leg here, and then we had the second leg here. Then all of a sudden, boom, the market goes up. Yeah. So this means you could have entered on the second leg here. See, that is a W pattern. That's a W pattern on the gold market. Maybe you can confirm using the line chart to see if it was a nice W. It was a nice W. You can see it was a nice W. Yeah. Unaona hapa very fake. You see here very fake. See here very fake. Mtu akajiambia maybe hapa, let me set the like Newton told me to set the law of Asia. Let me set the law of Asia. Let me wait for the market to take liquidity. They may take liquidity. Then the market goes up a little bit, then fails. Yeah. So the ones I'm teaching you guys is I'm teaching you probabilities. I'm teaching you probability. Like I'm not a master of like this trade is going to make like it's going to go 100%. No, 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 no. Yeah, we're just playing probability. Even if you get a trader, even those people who have been trading for 20 years, they can tell you guys like any in the market, anything can happen. Yeah. Yeah. I remember one student, I showed him the moving average. He wanted to understand how to trade the 50 moving average. So I remember it was on Wednesday. So on Wednesday, that was on November. That was November last year. So November last year, alipata trade. He got a trade it was on Wednesday. So that trade yenye alipata aliingia moving average, like moving average bounce. Let me show you something like this. Let me just show you something here. Maybe I can set here moving average so they can show you. Can show something here, moving average. Yeah. Also moving average inakuwa poa sana if you know how to trade with moving average. Yeah, there's some people are trading moving average. But the problem with the moving average, it's lagging, guys. Yeah, it's lagging. Yeah. So unapata inakuingiza kwa market very late. Yeah, you enter the market very late. That's the problem with it. So it works, but you enter very late in the market. So this one is a moving average 50. Let me show you something here. So I want to show you something like kind of like a psychology about what's going on. So there are some people, even me. I remember 2022, I used to trade this strategy. And it went well. I passed one of the challenge of Profam with this. Only one moving average. I used to trade 50 moving average. Yeah. Yeah. But the problem with the 50 moving average is you need to wait. You need to wait. Let's say for example here, the London market is opening. You can see here. So the London market is opening at 10. So you just imagine you're just on the screen waiting for the market to bounce at 50, waiting from 10, 11, 12, 3, and then let me set times on my time zone so that you can okay, 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 okay. Yeah, now it's 21:12. So you can just imagine this person amekuja kwa screen 10. Then from 10 uko tu kwa screen unastia screen TV for example hivyo. Umekuwa kwa screen unastia tu screen from 10, 11, 12, 1, 4, 2, 2 p.m., 3 p.m., 4 mpaka 3 p.m. So 3 p.m. tena uko kwa screen 2, you're just staring at the screen 3, 4, 5. Now at saa 10, 4:45, that's when you're going to enter a trade. So no, no, like the whole day umekaa tu kwa screen, umestare for screen, watch to screen hivi. You see? Mm. I think that thing that hiyo stay on the screen that nilifanya nika change my system. Nikasema for me, I want to look for system that I can trade on the London Open. No, no. I wanted to look for a system. I wanted to look for a system that I can train London Open. You know, guys, for example, kama hiyo. You see, maybe this time, maybe nimepata maybe a different thing to do. So maybe sometime, so trading moving average, sometimes you can miss trade because this niambia like the whole day you're just staring on the screen, like waiting. Yeah, for this one, for the market to touch 50. Yeah. So I think guys, I think guys you've understand why I usually focus on the London Open than waiting for the market to bounce for 50 moving average because you need to wait, you wait. Yeah. Oh, like how many are getting the reason why I love trading the open than maybe like waiting for maybe 3 hours, 4 hours. I think as you can see the disadvantage part of it. How many are seeing the disadvantage part of it? You want to see, guys? Yes. I want to see if you're getting things. Yes, guys. Yeah. So that is what I like. Yeah, that is what discouraged me to trade the moving average. But guys, this moving average, it works. Yeah, it works. Yeah, it is really good system. It is a really good system that you can trade. But for me, I have like for me, I can't just be on the screen for the 7 hours just in the screen waiting for the setup. For me, I have other things to do. No, no. Yeah, but if you are really free, you can trade well with moving average. If you are really free, you don't have other things to do, then you can do it. Yeah, you can do it. You can focus on moving average. It works. Yeah, mostly beginners usually focus on the moving average. As they advance, ndio wanakuja kuona like, oh, this thing, wanakuja kurealize that, oh, this thing, oh, I can trade the open. I can trade the London Open, I can trade the New York Open. Yeah. For me, when I realized you can trade the first 1 hour of market open, then nikajiambia now, from today, I'm gonna be focusing on open, trading the open. Then nikakaa chini, I looked for a system that I can trade in the open. I backtested several systems. Yeah, it took a lot of time, a lot of dedication to trying to understand how to trade the open. Yeah. So that's why. So you can see this one, you maybe ulikuja ukachukua your trade there. So guys, it works, but it takes time, no, no. So I think that the problem yake ni moja, like the problem is that you need to wait for the setup for some hours so that you can get entry. See? So this one is your entry or your stop loss, then your entry here. Then write the trend. Again here, can see here? Again here, the market came and bounced. No, no, you ngoja for how long? 10, 11, 12. You can see 11, 11:30. At least, this one at least ilikuja mapema at least. So I was telling you guys, so if yesterday kama this one, if today, if this market, so if this market on Thursday, market came and bounced the moving average and it went well. So that student mwenye nilimwambia like on Thursday market ilibounce kwa moving average akamake profit. Then on Friday market ikabounce kwa moving average. Akaniambia sasa leo nime increase risk Newton because nimeona hii system ina work sana because jana ilikuwa 50 na exactly today ni bounce kwa moving average. Let me increase the risk. Nime double lot. Double lot. So guys, this trade of Thursday and this trade of Friday, it is totally different. Totally different. And also the people are trading, like unaona like I learned from a certain book naitwa The Market Wizard. That, guys, the people are trading the moving average. You see the people are trading the moving average here. Boss of the moving average. So the people are trading the moving average are groups of people. I don't know, maybe there's some institution who are in maybe South Africa, banks in South Africa or US or Europe, but it's a group of people, African, you see, it's a group of people. So let's say, for example, let's say, for example, we have, let's say, for example, we have one group, one person who is missing. So if one person missed to trade the moving average that day, if one person missed to trade, na maybe anakuanga na more liquidity, setup ita fail. Unaona? The setup will fail. So it means like every day, hawa watoto wenye walitrade hapa, all those people wenye walikuja wakatrade hapa. So to mean on Thursday, lazima wote they come to trade here on the bounce. So mmoja ikikosekana na kona more volume, then you trade setup ina fail. I didn't know about it, guys. Sikuwa ijuanga hii stuff. Even every strategy. Yeah. Unaweza pata maybe like on that group of people, kuna one institution that they have got bigger volume out on a move market and they're trading moving average. So if those people maybe they miss to trade because of maybe bank holiday in their country, then the market ikikuja bounce kwa moving average, it will fail. Exactly. Because we don't have that one group of people who always push the market up because they have got more volume. Yeah. So it's about a crowd. No, it's about crowd. E-market is about crowd. Like who are moving the market. It's about, yeah. So for me, I remember for me, like when nilikuwa naanza forex, mimi nilikuwa nafikirianga tu like I want to trade only charts. Yeah. These are group of people. This one you can see hizi ni watu, hizi ni group beliefs. We normally call beliefs of people. Yeah. So maybe hapa, maybe market, maybe like, for example, the market, if the market bounces to the 50 moving average, we have got groups of people who believe the market will go up. So if those people come to the market to trade at that time, that's when the market will go up. But if less people than yesterday come to trade this setup, then the market will slack down because it doesn't have volume. So it will fail. See? Yeah. So ukiona market ime bounce kwa 50 moving average and imeenda hivyo, to mean more people came with a belief that, oh, this market is going up. It's going up. So ikifail, ujue like most people they didn't have the belief the market was going up. So most of them, they were out. They were not trading. Yeah, ukijua hivyo, like it will really assist you to understand how to trade. Yeah, maybe let me set a GPPUSD. Yeah, so hizi ni zote zina work. Moving average, all these indicators zina work zote, guys. Hakuna yenye tunaweza sema like it doesn't work. It works, all of it does work. Yeah, but today we're not focusing on moving average. Let me I was just showing you an example part of it, like a way in which you can trade. Yeah, so today we had a market GU going up. So this GU going up, so this GPUSD going up. So this GPUSD going up, yeah, hii ilikuwa ni Trump. Hii ni news ya jana ya Trump. Umeona leo market imebai sana. Yeah, kuna news jana ya Trump alikuwa ameannounce on the US index. Yeah. So ndo maana market imespike juu sana. Yeah, it was impact. Yeah, so hii ni news. Yeah, avoid, so as you trade, unaona market kama hii, avoiding sana. Ukiona market is going 90 degrees, inaendanga tena chini 90 degrees again down. Yeah, chungana sana market inaendanga uptrend. Sana sana gold inakwanga hivyo. Like it's going up, then all of a sudden unapata news. Oh, we expecting. Oh, tomorrow is NFP. Tomorrow is Friday. Yay! Tomorrow is Friday. I think tomorrow we are going to go live. I'll try your time kama napatikana, maybe you can go live at that time. Yeah, NFP. Yeah. Yeah, tomorrow is NFP and yes. So make sure tomorrow usifanye full margin on don't do full margin on On news, yes. So news, guys, just imagine right now. Just imagine right now the NFP tomorrow, the NFP is tomorrow, but like there's no one who can predict news. Hakuna. Nasikia mtu anasema like for me I know to predict news like this thing is just probability. Yeah, this thing is probability. Anything can happen. Even if you analyze news, you take reports, you research. Then if these people want to manipulate market, they can manipulate against you. You see? Yeah, yeah. So it needs to in probability. Sometimes it can go in your favor, sometimes it can go in your favor. So if it goes in your favor, well and good. Yeah. Yeah. Well and good. So I think what we can do before we close this meeting, I think we can check swing trading. You can check maybe how the market is moving on a swing trade. So on a swing trade, I usually use the Ichimoku. Maybe to check Ichimoku. Hey. Let's check on Ichimoku. So this Ichimoku natumianga on a swing trade. So if you really want to understand swing trade, Ichimoku, I think very soon nitakuja kuwafunza Ichimoku pia. Yeah, very soon I'll be teaching you Ichimoku. Let's check maybe this one is a swing trade. This one is for so this system inakwanga poa kwa swing trade. So this one is called a bullish cloud and a bearish cloud. Yes. So you can see today the market is uptrend. So this swing trading watu wamemiss. Hii ingekuwa hapa. Entry ingekuwa maybe around hapa. Kama unafanya swing trade. Yeah, hii unaweka stop loss kama ya 40 pips. Hii unaweka kama 40 pips. Then unaweka TP kama 600 pips. Yeah, 600 ama 500 pips. Yeah, the least you can set maybe kwa this one is 500 pips TP. Yeah, on a swing trade. Na inaendanga for the whole month. Because ukiangalia, let me check for example here. Let me check on so the idea part of it, yeah, it's not that to trade this indicator. The idea part of it is let me just show you. That's just a little bit, then very soon I'm gonna be scheduling maybe a fresh class on how to trade the Ichimoku. Yeah. So guys, the idea part of it is number one, guys. Let me just go very fast to show you guys. Yeah. So you can be a swing trader also. So the idea part of it, guys, the idea part of this, the idea part of it is number one is let me just start from here. So when the market, so this one is called a bearish cloud, this one is called a bullish cloud. Yeah, I'm just going like just a simple way to brush it. Then, but I'm going to be going deep maybe on next week. Yeah, next week, maybe on Monday or Tuesday, I'm going to be showing you this one. So guys, so this one is called a bearish cloud and a bullish cloud. So in this cloud is turning green, is telling you the market is bullish, going uptrend, uptrend, uptrend. Then if the cloud is bearish, red one, so you can get this one on TradingView. You just type indicators and then you type Ichimoku, even is this one, Ichimoku cloud. So how do you look for your entry on Ichimoku? So one of ways in which you can trade is you wait for the market to break above the cloud. You can see here, you wait for the market to break above the cloud here. Then you're going to enter market. Then you can get this trade. Remember, we can stop loss yako maybe a little bit. That was stop loss was how much? Around 30 pips. Then you target maybe you can target maybe 300. Yeah, that is 1 to 10 risk to reward ratio. So here was ilienda ulimeka kama 10%, ukakuja tena hapa tena ime break below the cloud, then downtrend again, you sell it. Haya, angalia pia hapa, just brushing it guys here. See here, yeah, kama 400 500, naona imeweka imefika 500 pips. Iko make 500, so inamaanisha from 4th July, from 4th July hadi 2nd September, July, August, September, haujai make any loss kwa forex. You have never made any loss for 3 months. You have never made any loss. That is swing trading. That is swing trading. That is called swing trading. Yeah. But kuwait naye utangoja. Sometimes you can wait. That is the disadvantage. Disadvantage part of it is sometimes you need to wait. You need to wait. Yeah. This one ilifail. So unaona you guys ilifail. Ilifail. For example, ingia hapa trade ya sell. Ooh, the market came down a little bit, then it failed. It happens. Then here above the clouds, kabai. Hey, like in this one, I will hold. But one will you hold how many pips this one? Maybe you can check, see how many pips you hold it. You got it, how many pips? Maybe 200. Yeah, 200. Yeah, but this one is crazy. This one is crazy here. But this one is crazy here. You can just imagine you got an entry here. Now will you hold mpaka huku? Ah, yeah. 700 pips. So you can just multiply with the amount of money uliingia nayo with the lot size. Hata weke tu 500. You can just set 500. Just set 500. Let's say umechukua 500. Let's say ulichukua tu 500 ukasema mimi acha nichukue 500. So 500 uliingia na lot ya you enter with a lot of 0.1. So that is that is 500 USD with a 0.1 lot. Haya, kama uliingia na 0.5, that is 500 times $5. That is that's a lot. Let me just multiply here. 500 times 5. That is 2,500 USD. Yes. Yeah. Swing trading. But for swing trading, you need to have at least more capital. Yeah. You need to have at least more capital. Maybe 300 USD plus, maybe 300 to 500 USD. Yeah, the least you can have for swing trading is 300 USD. Yeah. I think that you can do very well. Yeah, 300 USD. Yeah, can say maybe 300 USD. Yes, you can earn a 300 USD. Yeah, if you're very serious to do swing trading, wekele $1,000. Yeah, upige hiyo malot vizuri sana, ungoje trade for a month. You can wait for. So hizo ni kama salary. Hii ni kama salary sasa tu. So unaona kama diesel ungekuwa umeingia hapa already uko buy ya swing trade for the whole month. Unaona hapa already uko for the whole month. Already you're inside for the market for the whole month. So it means from now we are on 4th. Today is 4th or 3rd. Is 3rd. From 3rd until 25, 26, that's when you're going to exit. Around that time. Yeah. So guys, I'm gonna be showing you this. I'll be showing you this, I think, next week. So we've got so many things hata sijaonyesha. Unaona kuna vitu mingi pia sijaonyesha. Unaona kama hizo, see? We have got so many things. But tu simplify. I've just simplified. See? So we have got so many things. We have got this color lagging span, baseline, conversion line. So we're going to cover it. So if you want to do swing trading, maybe you can do it. Yeah. Because if you love swing trading, you can do it also. Okay, guys, maybe if there's someone with a question, maybe. There's someone with a question, maybe. Yes, maybe one person maybe to say something before we close it, guys. When we get how many how many are enjoying this session of psychology class since we started? Okay, nice one. Nice. Okay, thank you. Yeah, nilikuwa nimepotea kidogo nilikuwa nimelost kidogo but yeah, I'll be doing it on a daily basis. This class of psychology.